0.7% or 130 point jump on the Nifty.
For our own markets, after getting that gap up, we've only sustained at those higher levels.
Up around close to 200 odd points for the Nifty.
Today we're trading at the upper end of the band, so I like that. The HDFC Group, well, they are in top form. It's been a good session. The Nifty's broken the jinx. We have ended at the high point of the day, conquered 18,000 mark on a closing basis, which is pretty good.
18,000 on the Nifty was here. It was a good trading session. Hello and welcome. You're watching us here on Markets Today. This is a show where we track 6 hours of day's trading action in 5 headlines. The biggest headline of them all was the fact that the Nifty did conquer 18,000. I'm Mangla Malu. Let's talk about all the top stories of the day. The Wall Street hits the highest level that we've seen in nearly 2 months. Sensex gains nearly 800 points, whereas the Nifty reclaims 18,000. 44 out of 15 Nifty stocks end in the green. Maruti swings between gains and losses even as it hits a new high after analysts up target prices, while Dr. Reddy's gains then slips even as the company offers a positive guidance. Veteran investor Chris Wood says India market has shown phenomenal resistance amid global turbulence, remains bullish on oil and is betting big on the energy sector, expects a year-end rally in global equities. Tata Power continues to clock gains on higher coal business profits, while JSW Energy gains despite a weak quarter on hopes of a better second half. But NTPC skids on losses in its joint venture. Bharti Airtel rings in the cheer in the second quarter with an all-round beat. Profits rise 34%. The average revenue per user is at 190 rupees per person and the margins are at 51%. Those were all the top stories. Let's talk about what we have in line for you on the show today. It's a packed show. We have Christopher Wood, Global Head Equity Strategy at Jefferies, to talk about the US market and possible rally in the latter half of this year. In Big Corporate Voices, we have Erez Israeli, the CEO of Dr. Reddy's, and Praveer Sinha, who's the MD and CEO of Tata Power. Let's start with the market action first. It was a good trading session. The bulls managed to regain lost ground for the third day in a row. Importantly, the Sensex as well as the Nifty did extremely well. Sensex gained 800 points. The Nifty conquered that 18,000 mark. The banks and mid-caps also rose in tandem with the blue chips. However, the banks were slight underperformers in today's trading session. Nigel joins in with all the highlights of today's trading session. Nigel, we saw a gap up opening and thereafter that sustained only to see a last hour flourish.
Well, it was indeed a good trading session for the bulls today. The Nifty went ahead and conquered that 18,000 mark on a closing basis. What was interesting is the Nifty has been outperforming the Shanghai market, and today it was a 2% outperformance in a single session because they were down close to 100%, we were up close to around 1% or thereabouts. And the Nifty, well, we broke that jinx that we've been seeing over the last few days. It's normally we open gap up and then all through the day we do nothing much while recovering in the final hour of trade. Today you held steady for most of the trading session. You ended virtually at the high point of the day. The rupee weakened though, and that was a bit of a spot of bother because it started moving to around that 83 odd mark. However, that wasn't enough to derail the Nifty's up move, and we got through the final hour without any big correction on the Nifty. The winners today, they included the HDFC Group. They bounced back in style. HDFC Bank, both large weightages on the Nifty, they came to the party, and domestic facing themes like cement as well as autos, well, they did well, and select stocks as well did do pretty well, which will be up for you on the screen. Both the pillars of the markets did well today. The IT index, well, that was up close to 1.5%, and the banking index was up close to around 0.8%. However, though both these indices were higher, there were select stocks that were under pressure, telling you that the tide is not going to lift all boats. Earnings reactions on Bandhan Bank as well as Intellect Design, both of them did see selling. Both of them were down more than 10% in trade. So it seems the market is selective about what they want to buy, and they're reading through with regard to these numbers as well. But from the mid-cap index, well, there were select gainers. It started off a little bit slow, but select stocks did very, very well in trade today. Nykaa was up and about in trade. Remember, the fear is there'll be big supply. However, there was a corporate action. They have postponed that, the effective date out there. So that's why that stock ran away. Trent was higher. Campus Activewear as well did pretty well. So it was a good session. It's a good start to the week. Now over to the Fed in the next couple of days. And if the outcome is dovish, maybe we'll see fresh all-time highs rather soon on the Nifty.
All right, let's get you some expert opinion as well on the markets. Harsha Upadhyay, who's the CIO Equity at Kotak Mutual Fund, said that they continue to remain underweight on the IT sector, and he added that they're positive on the large private sector banks with a strong current and savings account deposit levels. Listen in.
we continue to remain underweight on IT sector. Yes, in the very short term, the global cues may lend some stability to IT sector. However, we believe that 2023 IT budgets would be softer than what most participants are expecting. And even when you look at management commentary of the recent past, it seems to indicate that there are pockets of weakness in terms of various user segments such as retail, mortgages, discretionary, high tech, etc. And our belief is more of a weakness would be seen as you go into 2023. While margins have held up until now, but with weakening demand, you could also see some pressure on margins.
All right, and in some more market opinion, Mark Matthews of Bank Julius Baer & Co. said that data shows that inflation perhaps has peaked and will be coming off going forward. He added that the market will not be shocked to see a 75 basis points hike in the US Federal Reserve's November meet, which is just 2 days from now. Take a look.
Data will continue to show us that inflation peaked some time ago and is coming off. And if you look at the so-called Anglo-Saxon central banks, that's what the Europeans like to call them, the Bank of England, the Federal Reserve, the Bank of Canada, the Reserve Bank of Australia, Reserve Bank of New Zealand, they tend to act loosely in a group historically. And at the beginning of this month, we had the Reserve Bank of Australia sound a note of caution. They hiked by 50. The market was looking for 75. Last week, Bank of Canada was supposed to hike by 50. They did 25, also sounded a note of caution. And so I think that we can tell the wind is shifting to a more accommodative policy globally. And I think that'll include the Federal Reserve.
All right, the second headline of the day, it was Maruti, which ended 0.25% higher after the stock hit a fresh 52-week high, a fresh one after doing well on Friday's trading session as well. And this on the back of strong management commentary, as well as on brokerages upping their target price on the stock. Sonal Bhutra joins in with the details on Maruti. Sonal.
Yes, good numbers reported by Maruti in Friday's trading session, and they held a conference call after in which the management commentary was quite positive. They said that realizations were higher in Q2. This is on the back of price hikes, and also they are seeing higher share coming in from Brezza and the new Alto as well. Their overall order book stood at 4,12,000 units, out of which a substantial amount, something to the tune of 1,30,000, came in from new launches like Brezza and Grand Vitara. Order book also remains strong for Ertiga and Baleno models this time around. They will launch new models in the SUV segment going ahead, and they have announced a capex of 7,000 crore rupees in FY23. The chip availability is still an issue for the company, and around 35,000 units, the production of those many units was impacted in the quarter gone by. They say that they could see commodity prices inching up in Q4, but Q3 will be stable for the company. On the back of strong numbers and positive management commentary, a lot of brokerages have gone ahead and increased the target price. Citi says Maruti is the top pick in the sector. They have increased the target price to 12,500. Jefferies has raised the target price to 12,000 rupees. UBS says that strong SUV comeback will bring in better average selling price and profitability as well. And Goldman Sachs, with a buy rating, also says that the SUV segment uptick that we are talking about is something which will be positive for the company.
Take that point, Sonal. Thanks a lot for that. Dr. Reddy's is the other stock which was in focus today. Then ended about 0.5% lower, even as the company reported its highest ever sales and EBITDA numbers. In fact, the guidance was also positive. The stock opened with gains and thereafter saw some bit of selling and currently ended just below the flat line. Ekta Batra joins in with the details on those numbers. Ekta.
Yes, definitely for Dr. Reddy's, it was a blockbuster quarter in terms of what they reported in Q2. But that was primarily driven because of the blockbuster cancer drug Revlimid generic. And hence you saw volatility in the stock simply because questions on the base business emerged. Now, basically on the numbers, the revenue was up around 9.4%. The street was estimating a flat growth this time. Margins 30.6% versus expectations of 22%. And a profit which was higher than expectations of around 787 odd crores. Now, the US added $344 million in terms of sales. The street was anticipating $255 to $270 million. And Revlimid generic is expected to have contributed over $100 million in terms of sales this quarter versus expectations of around $40 million. Also, Russia did well. It was up around 85% on a Q-on-Q basis. But the other growth engines faltered a little bit. For example, their pharma services and active ingredient segment was down around 23% year-on-year. India was flat this quarter as well on a year-on-year basis. But brokerages seem to be more positive on the longer term. One, because Revlimid generic is expected to contribute in the next couple of quarters as well, despite the fact that we don't know how much it would contribute, as well as the fact that the company is sticking to its 25% medium-term EBITDA guidance. For example, Nomura says Dr. Reddy's is putting in place the foundation to diversify its presence in multiple markets. So yes, maybe in the near term there could be some faltering in terms of growth as well as maybe US market concerns ex of Revlimid, but on a longer term it seems as though the growth drivers are intact.
The product meaningfully contributed to this growth. At the same time, we have other good products as well in the US. So we cannot share, as it's part of a volume limited settlement that we had with the innovator, we cannot share exact numbers, but we believe that this product, as well as the other product, will continue to contribute meaningfully also in the next coming quarters. I cannot share numbers, but it is a very good launch for us, and it's going to continue to be like that as well, as you said, in the next coming quarters.
Right, that's the commentary coming in from the Dr. Reddy's management. Let's move on to the third headline today, and this one is with regards to the markets itself. The resistance in Indian market has been phenomenal, and that's not my words, that's the word actually coming in from Jefferies Global Head of Equity Strategies, Chris Woods, better known for greed and fear. He added that there was a possibility of an year-end rally courtesy softer CPI and a midterm election in the United States. That's on expected lines. Speaking to CNBC-TV18 earlier, he also said that he remained bullish on oil and is actually betting big on the energy space itself. Let's hear him out.
There is a possibility of a rally into year-end, partly because the next CPI data point, which should come out just after the midterm elections, has a better base effect. First point. Second point, if the midterm congressional elections go in a way which the market perceives to be positive, I think both those events can trigger a bit of a rally into year-end. I remain very bullish on oil. I think oil goes materially higher. My favorite sector in global equities is energy. So in a global portfolio, I want to have weightings to India for obvious reasons, but I also want to hedge that with energy exposure, because clearly energy is a vulnerability for India. Though I think India is less vulnerable to rising oil prices than 10 years ago. On India, what's been amazing about India this year as a stock market is its phenomenal resilience in the face of a very weak Wall Street, in the face of record foreign selling of Indian equities in the first 6 months of the year, and in the face of a quite significant monetary tightening cycle by the Reserve Bank of India. You know, I think the Indian stock market can go materially higher in the next 5 years, assuming we remain in a residential property market upturn, and we get a CapEx cycle following it.
All right, with that, we'll take a short break now. Stay tuned, but we'll be back in a jiffy with all the other headlines. Welcome back. You're still watching us here on Markets Today. Let's talk about another headline today. A bunch of stocks, actually, they were in focus. Tata Power gains on higher coal business profits, while JSW Energy gains despite a weak quarter on hopes of a better second half of this year. But it was NTPC that skids on losses in its joint venture. So that was all about the power sector numbers. We spoke with Praveer Sinha, who's the MD and CEO of Tata Power. He expects a huge growth in renewable businesses going forward. Talking about the Mundra project, which was important for the company going forward, he said that the CERC has heard the matter on Mundra and a decision on the same will be out in the next few weeks, and that's a big trigger for Tata Power itself. Let's listen in.
Mundra, some of the issues have been decided in the interim order from CERC, and the final order is awaited in November. And I think whatever gets decided, especially in terms of the cost pass-through for coal, and the fixed cost and the capacity charge, all that will become the future baseline for which the supply will take place. In our projections that we had given, that we will make it 4 times the profit we have considered a very muted coal impact. So it's not that we have considered the present impact of coal. We have definitely considered that Mundra resolution will happen partly on the lines that what we are expecting from CRC. So that has been considered, but we are definitely expecting a huge growth in our renewable business and in our T&D business.
All right, and with that, we talk about the fifth headline today, the biggest one of them all. Post markets, we got the numbers from Bharti Airtel. A cheer in the second quarter, an all-round beat actually. Profits rose around 34%. The average revenues per user hit the 190 mark, and margins also came in at 51%. However, the company saw a muted growth in subscribers. Data usage also saw a strong growth quarter on quarter, even as voice usage dipped, and that is something intuitive, right? So that's about Bharti Airtel. And in other news, Bandhan Bank was the one that actually took a massive nosedive in trade today. Fell over 10% in double digits after brokerages cut their FY23 and FY24 earnings estimates after a weak set in the second quarter. Abhishek Kothari joins in with the details on Bandhan Bank. Abhishek.
Well, brokerages have downgraded EPS estimate and target price on Bandhan Bank post its results. They say that, Bandhan Bank arguably underestimated the stress pool and is taking longer time to shrink the overall stress pool in their balance sheet. So they expect the EB stress pool to actually get written off by FY23. So provisions have remained elevated in Q2 and brokerages expect provisions to remain elevated in H2 FY23 as well. So earnings will normalize in FY24. They remain watchful of the high SMA portfolio or the special mention account portfolio and the asset quality of Bandhan Bank. So credit cost guidance by the management has also been increased now to about 3% for FY23 versus the earlier guidance of 2.5%. So brokerages have cut the net interest margin and the EPS estimate. So net interest margin has been cut anywhere between 80 basis point to 100 basis point, while for earning estimate, FY23 has been cut anywhere between 13% to 50%, and for FY24 and 25, the earning estimates have been cut by 7% to 30%. So across brokerages, you are seeing a cut in the target price as well, but they remain bullish given the valuation that the bank is trading at. So brokerages have cut the target price anywhere between 6% to 18%. Back to you.
A normal sum of this, the slippage will come. It is now coming on that the 500 to 800 crores has come to this the quarter basis on that. So when the second and third quarter will come, which the business growth level is coming very high, there is first the point of that the NIM are always we are looking on that the 7.5 to 8% is our targeted, and we'll be like to reach.
All right, and with that, we had Nykaa, which was a big gainer in today's trading session, rallied almost 20%, ended at the 20% upper circuit mark. And here are the key reasons for the surge. The biggest one, of course, is that the company has postponed the record date for its bonus issue of 1:5 from November 3rd earlier to November 11th. Why has that happened? Well, we don't know that yet, but what this does is that takes away some of the supply fears. Because remember, November 8th and 9th, there is a fear of a fair amount of supply coming in as the lock-in on pre-IPO shares open that time. So, there was some fear that after the bonus, the stock goes ex-bonus on November 3rd, we would see some bit of sell-off also as people who would have bought for the bonus will start selling. But that supply has been postponed to post-November 11th, and tomorrow is the second quarter results as well. For all you know, it might as well just be some of bottom fishing that the street would be looking at after declining almost 19% in October, 50% in this year itself, and 60% from the highs sub-IPO levels. So those who perhaps may not have gotten the shares in the IPO would have looked at it right now itself. That explains the kind of up move that we saw on Nykaa. But with that, let's move on to a CNBC-TV18 exclusive. The insurance regulator has asked the SEBI to examine the fair value of any potential wrongdoing in the Axis Bank Max Life transaction. The IRDAI has already imposed a penalty on Axis Bank and Max Life for violating these fair value norms. Yash Chen joins in with the details.
Well, so far it was just the insurance regulator which was essentially investigating or examining the red flags which it had pointed out in the Axis Bank Max Life transaction. There were penalties which were also imposed on the two companies. But now it seems like market regulator SEBI may also start examining this particular deal between the two companies. That's because what we've been given to understand from our sources is that the insurance regulator IRDAI has written to SEBI asking them to examine any sort of violation of securities regulations which might have happened in the Axis Bank Max Life deal. Remember, the insurance regulator had pointed out two important things. A, the transaction is not at a uniform valuation to the earlier transactions in the company, that is in Max Life, and B, the price per share was not fair market value. Essentially, the insurance regulators asked SEBI to look at, what was the kind of benefit which was generated through this discrepancy in the valuation of price per share in different transactions in Max Life, and B, if there was a benefit, who benefited out of this particular undue gain which was made out of that transaction. That's the request which has been made by the insurance regulator to market regulator SEBI. We've written to both regulators on this particular story, but we're yet to receive a reply from either of them.
All right, Yash, thanks a lot for that. With that, we wrap up on this edition of Markets Today. Thank you for watching.